Hello everyone, myself CAS Ranjit Kumar, practicing chart accountant and uh, teacher by profession and also by passion also. So today topic for the day is value of supply. There are totally 5 subsections in value of supply, out of which we are going to cover 3 in this video, and balance we are anyhow will cover it in the class when you are up to come. Okay, and earlier also we have posted a video with respect to time of supply. Please go and watch time of supply. With respect to goods, we have already made a video on that. So yeah, we'll jump to the topic now, which is value of supply. So in order to understand the value of supply, we have to know what is supply first of all. So that will be covered in the class. Okay, definitely if we understand supply only, then we can understand what value of supply. So value of supply is nothing but what are all those values you have to add and what are all the values you have to exclude. If you know all those items, then value of supply is just a matter of 2 minutes sum only, basically. Okay, so it's covered under the section 15 of CGST Act. So that is what is pointed here also. So 15 of CGST Act. So there are five subsections, and rules with respect to 5 subsections are rule 27 to rule 35. That will be covered in the class. Okay, so value of supply, this is the what they have drafted in the act. Okay, so this is our class notes will be basically. Yeah, so we'll understand what is value of supply. So taxable event under GST law is supply. Okay, taxable event under GST law is supply. So we learned different types of supply. Now we'll understand what is the value of supply. So see, once you understand supply, there are multiple supplies are there, which is a taxable supply, exempted supply. On that exempted supply, there are zero rated supply. In that nil rated supply, wholly exempt supply, non-taxable supply, interstate supply, intrastate supply, composite supply, mixed supply. So all those supplies you have to be familiar in order to understand this value of supply. That we will understand those topics in the class. Okay, since it's an demo or introduction video with respect to inter and final, these value of supply is covered in both inter and final. So I'm taking a common topic which is common for both inter and final. Okay, so yeah, so we'll understand. See, value of taxable supply. So first, see, tax is levied only on taxable supply. Okay, tax is not levied on other than the taxable supplies. Fine. So value of taxable supplies are transaction value plus certain inclusions minus certain exclusions. So not to understand this value of supply, first you have to know what is a transaction value. Then you have to understand what is inclusions. Then you have to understand what are those exclusions. If you exclude properly means, then value of supply will be correct. Fine. So 15 subsection 1. In that section, they are telling the meaning. This is a basic section for value of supply. It's a basic section for value of supply. Clear? It's a basic section. What they are trying to say, see, transaction value. See, our type of notes will be like this only. So usually how I will give notes is, so I will take what are all those section, subsection, rules, sub rules, proviso, explanations, everything what they have said in the act, that we will be given in the first page of the topic. So this is what we are trying to learn now. First, we'll understand our understanding, how we will learn in the class. Then we will come and see whether based on that understanding, we will see the act draftings, and we'll understand whether we will we have understood all those draft, what are all those specified in the act. Okay. Yeah. Fine. Yeah. See, our understanding. Transaction value is nothing but assessable value. Transaction value is nothing but assessable value. In order to, this transaction value must be assessable. Assessable value is nothing but the value on which tax is levied. Clear? The value on which tax is levied. This is equal to this provided if 3 conditions are satisfied. How many conditions are satisfied? 3 conditions are satisfied. That condition is PSP. There is a game, right? PSB, PS2, there is also a game, that's PSP. So not understand easily, we use some kind of short forms. Okay, so PSP is nothing but price actually paid or payable. Price actually paid or payable. Price actually paid or payable. Then supply to an unrelated person. Supply to an unrelated person. Then price is the sole consideration. Price is the sole consideration. If these three conditions are satisfied, then the transaction value is assessable value. Then transaction value is assessable. If one of the condition is not satisfied, if any one of the condition is not satisfied, then you have to jump to the valuation rules. Clear? Then you have to jump to the valuation rules. Clear? So what are when transaction value is equal to assessable value? When three conditions are satisfied, right? What are those three conditions? PSP. What is P? Price actually paid or payable. What is a supply to an unrelated person? Then what is another P? Price is the sole consideration. We'll understand what is those three conditions. Just price actually paid or payable. See, supplies already happened. Then with the price we are already, supplies already happened. So for which we are going to pay the amount for that supply, which is payable. When we paid the advance to that supply and we already paid during the course of the supply, then that is price actually paid. It's nothing but a present tense and past tense and future tense. That is what paid or payable. Nothing but the amount you are going to pay for that supply. That is the price actually paid or payable. It's a common terminology only they have used. Then supply to an unrelated person. See, whenever you're making any, if you're providing any supply to a related person, you will have some buffer in the profit, right? You will give at a lesser price. Suppose I am a person, I am giving a product to my relative. Okay, the relative definition they have specified. Okay, they have explained in the value of supply chapter only. So in that relatives, I am giving some product, means whether I will give at a profit at a higher price or I will give at a lower price. You say, to my father, if I'm giving a product, I will give it a lesser price, right? If because of this lesser price, I will levy tax at less rate. If I'm selling that product for 100 rupees, means I will levy tax 18%. So 18 rupees I will pay to the government. What if I levy the product is at 90 rupees? So 10% profit because of this reduction in the value of supply. Government is losing value to such extent, right? So that's what they are trying to say, that supply is made to one, even though if I made to a related person also, that value must be, what is the value made to the unrelated person? Clear? So something, but if you're making a supply to an unrelated person, you check whether the supply is made to an unrelated person, whether supply made to the related person or one and the same. Because government requires the tax amount, which is because what unrelated person only, you will make the proper value, right? Because related person, you will keep some margin. If you lose the margin also, it's fine for you because it's a related party transaction. Okay, so what the government they are trying to say is the value must be the value which you are given to the unrelated person. That value is the correct value government itself saying. Clear? Then price is the sole question. What is price is the sole question? They don't want anything other than the price, which is nothing but goods for goods, service for services, right? The barter system kind. If anything that, if other than prices, if you are receiving anything, means then you have to jump to the valuation rules. Suppose I'll give a question. Suppose I'm providing auditing services to a company, and that company is in turn not paying money, but they are providing some goods to me. Suppose they are providing a laptop to me. Whether price is the sole consideration for that supply? No, right? They are providing laptop to me. So then in this scenario, transaction value is not equal to assessable value because price is not the sole consideration. If I'm making a supply with a related person, then transaction value is not equal to assessable value because it's a related person transaction. Clear? When transaction value is not equal to assessable value, then you have to jump to the valuation rules. Clear? So now tell me, what does section 15.1 says? 15.1 says nothing but transaction value is equal to assessable value provided three conditions are satisfied. What is the first condition? Price actually paid or payable. Then supplied to an unrelated person. Then price is the sole consideration. Price is the sole consideration. If these three conditions are satisfied, then transaction value is assessable value. You don't have to jump and see what is the rules which are specified in rule 27 to 31. Clear? Clear? Okay. So we'll see what is 15.2. 15 No, we have understood what is 15.1, right? Now we'll see what the act they have what they have specified. See, the value of supply of goods or services or both shall be transaction value, which is price actually paid or payable for the supply of goods or services or both, and where the supplier and the recipient of the supply is not related, and the price is the sole consideration. See here, there we have used and condition. So which means 3 conditions has to be satisfied. If any one condition is not satisfied, then you have to jump to the rules and you have to check what are the rules with respect to these transaction and how it has to be, the value has to be computed. So from that rules only, with the help of the rules, you have to compute the value. Clear? So now you see whether after understanding our class, you can easily read the act itself. See, the value of supply of goods or services shall be the transaction which is the price actually paid or payable for the supply of goods or services, pay the supplier and the recipient of the non-related person, and the price is the sole consideration for the supply. Clear? Yeah. Similarly, we'll see 15.2 and 15.3. Clear? So 15.1 we have completed. So we'll jump to 15.2. 15.2 is nothing but inclusions. They're telling what has to be included. Okay, what has to be included. See, basically, I have a kind of giving notes with respect to our understanding. So in this class, when we are in the class, we will study in my method. Okay, in my method, I used to make you understand easily. So which is nothing but no GST, no TCS, and ISCA. Tell me. No GST, no TCS, and ISCA. So inclusions is nothing but no GST, no TCS, ISCA. Come on, repeat. No GST, no TCS, ISCA. This is with respect to 15.2. What is 15.1? We have understood in our understanding something but transaction value is equal to assessable value provided 3 conditions are satisfied. 1, PSP, price actually paid or payable, supplied to an unrelated person, price is the sole consideration. So in the matter, we will understand our understanding way. Okay, so in 15.2, what is our understanding way? No GST, no TCS, ISCA. Clear? So no GST, no TCS, ISCA. What we will understand what is that. So no GST, no TCS means, so you have to add all taxes other than GST and TCS. So you have to add all taxes other than GST and TCS. So assuming, so if you have paid a municipal taxes, you have paid a entertainment taxes. So all those tax value, if you are supplying, then for that supply, you have to add all those taxes. Clear? Suppose in a theater, they will charge ticket, plus they will also charge entertainment tax. Clear? They will charge ticket value, then also they charge entertainment tax for that entertainment services. So for that, assuming value is 100 rupees, tax value is 5%, which is 105. On that 105, you have to levy the GST. Clear? On that 105, you have to levy the GST. That is what government trying to say. You have to add all those taxes. So other than GST, you should not add. Assuming if the price of the product is 105 plus 10% GST, which is 110.5, which is 115.5. So you have to eliminate GST not to find the value of supply. We are finding only the value, not the tax portion. We are finding the value in order to put tax on that value. Clear? We are finding the value of supply to compute the tax of that GST. So that's what you are eliminating GST in order to find the value of supply. So first point, no GST, no TCS. No GST, no TCS means you have to add all taxes other than GST, TCS. Service tax, add. Custom duty, add. VAT, add. Duty, add. All taxes you have to add. Clear? Other than GST and TCS. So GST you have to eliminate in order to find value of supply, because on that value of supply you will levy GST. Similarly, TCS, tax collected at source. This is income tax TCS. Okay, income tax TCS. Income tax TCS is nothing but you will tax collect from the customer itself. So TDS is nothing but while paying to the customer or while booking the expense entry, we will deduct TDS, right? So similarly for TCS, you will collect the amount from the customer only. Assuming the price of the product is 1 lakh, you will collect TCS 0.5% from the customer. So 1 lakh plus 0.5% you will collect from the customer. So government says you eliminate the TCS portion. I want only the value. Clear? So it's nothing but 1 lakh. So except GST and TCS, all taxes you have to add. Clear? Whether TDS has to be added. The TDS, it's already there in the value of supply. Therefore, we will reduce further only. Therefore, it's not required. So that's the reason they said all taxes other than GST and TCS has to be added. Then, when I was in CA final, there is a toughest paper, which is ISCA. So based on that ISCA, which was familiar for us to understand this inclusions. Okay, ISCA. Tell ISCA. Yeah, ISCA. I for incidental expenses. Yes, for subsidy other than government subsidy. Subsidy other than government subsidy. C, charges for delayed payments. C, charges for delayed payments. A, amount incurred with the recipient on behalf of the supplier. Amount incurred with the recipient on behalf of the supplier. Amount incurred with the recipient on behalf of the supplier. So our understanding, what does section 15(2) says? No GST, no TCS and ISCA. What does no GST and no TCS means? All taxes other than GST and TCS, right? ISCA means I for incidental expenses, S for subsidy other than government subsidy, C for charges for delayed payments, and A for amount incurred by the recipient on behalf of the supplier. So we understand each and everything now. I, incidental expense. What does incidental expenses means? Commission, packing, inspection, certification, installation, testing, weighment, loading, designing, freight, insurance, etc. See, anything before or at the time of supply, you are incurring any additional expenses. Okay, that all has to be added. Clear? For that main supply. Clear? Suppose I am a product which I am going to transport it from one place to another. For that I have to pack. For that, then before packing I have to do some inspection. If customer wants some certification, I have to do some certification. When the product reaches the I agreed for installation of that product, then that installation, that testing, waiting, for additional incidental expense, all those incidental expenses with respect to main supply has to be added. Clear? Simple as that. Clear? Then subsidy other than government subsidy. Subsidy other than government subsidy. Subsidy other than government subsidy. See, government subsidy, whether government subsidy is a consideration. First of all, government subsidy is not a consideration. In consideration definition, they excludes government subsidy. So government subsidy, they don't want to add. So anything other than, if a government company gives a subsidy, then that has to be added. If private limited gives a subsidy, then that's a, what does subsidy mean? Suppose I am a supplier of laptops. Okay, so wherein I want to supply laptops to underprivileged students, or the students or rank holders in CA, something like that. Some students I am providing some benefit to the, for which government is providing subsidy. So price of the laptop is 1 lakh and government says 75% I will bear, I will provide a subsidy. So if government provides the subsidy, then the value of supply is only 25,000, which is 1 lakh plus 75,000 paid, then 25,000. Assuming instead of government company, Reliance Limited is giving, some big organization is giving, or government company is giving, or from my own corpus fund I am giving, So in all those scenario, what is the value of supply or made to an unrelated person, that will be the value of supply. So even though you have received subsidy from the government company or private organization or out of your own corpus fund, just 75% they are providing, means this is 1 lakh plus 70%, 75,000. Even though you have received that 75,000, the price of the product will be 1 lakh only. Clear? See, 1 lakh is the price of the product. After subsidy, what will be the price? 70% will reduce, which is 25,000. Right? Government says you have to add that subsidy which is not provided by the, which is other than the government subsidy. So other than government subsidy is what? The private organization or own corpus fund or government company subsidy, which is 75,000, right? So add panna 1 lakh only. Clear? So after subsidy, your price will be 25,000. So you have to add again that 75,000, which is 1 lakh. So that's what they're trying to. They want to increase the value of supply. Clear? Then charges for delayed payments. Then charges for delayed payments. Charges for delayed payments. What does delayed payments mean? It's nothing but IPL. IPL is nothing but interest, penalty, and late fee. Interest, penalty, and late fee. See, suppose I am a supplier. I am giving a product to my customer for a credit period of 45 days. Okay, as MSME vendor, I am giving credit period of 45 days. And after 45 days, they have to provide, if they are making the payment after 45 days, then they have to make the payment with interest. Clear? Assuming they made the payment on 60th day, which is 15 days later. Correct? 15 days later of my credit period. So price of the value that they are going to pay is 1 lakh, and they paid additional penalty or late fee of 10,000 rupees. Okay, they paid the 10,000 rupees. Whether they paid the 10,000 rupees, right? That 10,000 rupees has to be added to the value of supply. Clear? That will be known at the later stage only, but that has to be added to the value of supply. Clear? Which is nothing but that the 10,000 is inclusive of taxes. So you have to pay the tax to the government. Assuming 10,000 na, 10,000 divided by 118 into 18 will put the value of tax, and if you put into 100 means then you'll find the value of supply. Clear? So if I'm giving a credit period or some penalty I'm leaving to the customer, then the customer is paying that penalty, or the customer is paying the late fee, or customer is paying the interest, then that has to be added to the value of supply. Clear? If he paid additional GST of that penalty, which is nothing but 10,000 plus GST he paid, means then value of supply is 10,000. If he has paid only 10,000 means then 10,000 is inclusive of GST. Clear? Some from exam point of view, this point only they will test, guys. In this point only they will test, exam point of view. They will give charges for delayed payment, then they will ask you to compute the value of supply. So in this point, what you have to do is charges for delayed payments is inclusive of taxes if not specifically provided. Clear? If not specifically provided, then charges for delayed payments is inclusive of taxes. Clear? Then amount incurred by the recipient on behalf of the supplier. See, I am a supplier, you are the recipient. So I have agreed to transport, okay, from my place to your place. When the transporter, when the product you have received, no, you paid the money on my behalf. Okay, what we have agreed, only I will provide transportation. Since you paid on my behalf, that value has to be added to the value of supply. Clear? Because I have already agreed, right? We have already agreed for that product. So that product also had to be the value of supply. Clear? So that is, guys, 15.2 we have completed. 15.2 we have completed. So you want to see the how these things are drafted in the act. See, any taxes, duties, cesses, fees, and charge levied under any law for the time being in other than that state and goods and internal charged separately by the supplier. Any amount that the supplier is liable to pay in relation to such survey but has been incurred by the recipient of the supply, not included the price actually paid or payable. Clear? Fatama. Then incidental expense, everything. Then interest, penalty, late fee for delayed payment of any consideration for supply. Then subsidy is directly linked to the price, excluding subsidy provided by the central government and state government. Patacha. Correct, right? So simple da, ellame easy. Number class kanta ella easier. So 15.2 we have completed now. 15.3. See, before jumping to 15.3, we'll understand, we'll repeat what is 15.1 to 15.2, our understanding part alone. So 15.1 what we have learned, our understanding la, transaction value is equal to assessable value provided 3 conditions are satisfied. What are those 3 conditions? PSP, right? Price actually paid or payable, supply to an unrelated person, then price is the sole consideration. If any of the condition not satisfied, then you have to jump and see what is valuation rules. Valuation rules we have not seen, but we'll see in the class. Okay, since a demo class, I'm bringing a shorter time to take the classes. So I'm just limiting myself because I'm not jumping to the valuation rules. Then we have seen what is 15 to 15 to is nothing but inclusions. Inclusion, our understanding, no GST, no TCS and ISCA. Come on, elaborate it. No GST means no TCS means so, oh, you have to add all taxes other than GST and TCS. What does ISCA means? Incidental expenses, subsidy other than government subsidy, charges for delayed payment, amount incurred by the recipient on behalf of the supplier. Clear? Then 15.3. 15.3 is nothing but exclusions. 15.3 is nothing but exclusions. Exclusion simple guys. See, exclusion is talking only about discounts. See, nothing but discounts. See, discounts we can do. If discounts, if you know before or during supply and it is referred in the invoice then it can be reduced Clear? If discounts are before or during supply not referred in invoice, then you must ignore. Clear? You must ignore. See, I will give an example. I am a supplier, you are recipient. So I am giving a product to you and I am giving a credit period of 45 days. Clear? Giving credit period of 45 days, and I also specified in invoice saying that if you pay within 5 days, you will get a discount of 10%. If you pay within 5 days from the date of supply, you will receive 10% of discount. Assuming the price of the product is 1 lakh and plus GST 1,18,000. If you pay within 5 days, you will get 10,000 discount plus GST also you will get discount. So as a recipient is thinking and he made the payment within 5 days. So since it is referred in invoice, then I have to issue a credit note of 10,000 rupees. Clear? Credit note of 10,000 rupees saying that so it is a discount from my end because it has been agreed between both the parties and the same has been referred in invoice. Assume if not referred in invoice and I'm giving a discount to that party means, then what government says is no, you should not give in discounts with the GST. You can give discounts 10,000 rupees, that is fine. That is a commercial or financial debit credit notes that I don't want. That transaction I am not worrying about. Only to the extent of GST part government worries. So therefore what does government says is, if the discounts are known before or during the supply and the same is referred in invoice, then that can be reduced. Clear? Then that can be reduced. See, similar. Before or during supply referred in invoice, it can be reduced. Before or during supply not referred in invoice, then you must ignore it. Clear? Then what does discounts are given after supply? Discounts are given after supply. Sir, how, sir? See, in that invoice it must be mentioned saying that discounts will be given. First of all, discounts will be, and they have made an agreement separately. Like if you buy 1 lakh product from our end, then we will give a discount of 5%. So till buying 1 lakh worth of products, the discounts will be on hold. After purchasing of 1 lakh products, then the discounts will be come to effective, right? So, and the same has to be linked to the invoice. That's what government says. See, you can give discounts after supply also. I'm not worried. And there must be an agreement. See, after supply, as per agreement, and specifically linked to relevant invoices. Clear? And specifically linked to relevant invoices. Then it can be reduced. If anything is not specified, there is no agreement and it's not linked with the relevant invoices means, then you have to ignore that discount. It's nothing but you can give discounts worth 10,000 rupees or 5,000 rupees, but you cannot add GST on that 10,000. See, if GST, if suppose I'm giving product to you have to pay 1 lakh plus 18,000, right? So if I am referred in invoice and I give a discount of 10,000 rupees, 10% means you will pay lesser amount of, which is 1,18,000 means you will pay 11,800 less. Correct? You will pay less than, you will deduct 1,18,000 minus 10%, It's how much it comes once again. 1,18,000 into 0.1. So 1,18,000 minus 11,800, which is 1,18,000 minus 11,800. You will pay 1,06,200. So when you are not referred in invoice, what government says is you deduct 10% discount. So you deduct only 10,000, not with GST. So you have to pay 1,08,000. So the 1,200 with respect to the 10% of GST that you should not reduce. Clear? Sums we will understand clearly in the class, guys. And also with respect to the after supply, ITC of the discount must be reversed by the recipient. When initially supply happened, right? This discounts is after supply. After supply only the discounts are can be reduced. We are seeing. Okay, so in June month I made a supply to you. On December month you have crossed that 1 lakh product purchase. Okay. So in June month, I made a supply. I would have paid output tax. The recipient, you would have received the ITC of that. So on December month, you have purchased 1 lakh worth products, right? So on December month, I am giving a discount. On December month, and from recipient, from your point of view, you have to reduce that ITC with respect to discount portion. So that's what they're trying to say. The ITC of the discount must be reversed by the recipient. For interest students, see, you will not be aware of what is ITC, what is a reversal, what is the supply itself, basically. So you keep on hold, we'll understand beautifully in our class, okay? For final student, you may be familiar with whatever I'm speaking also, so you understand, see how our notes are there. So it's a user-friendly notes, basically. You can understand easily, and we'll give the amendment as and when amendments are coming, which is applicable to your syllabus. Everything will do as and when, guys. And this is our notes with respect to additional points for 15.1, 15.2, 15.3. This also we'll understand in the class. And additional, see, we have drafted beautifully, saying that I've given all those points. You can see our notes itself instead of seeing other study materials, basically. And I want to show the valuation rules for you. What is valuation is? See, I have sums also, basically. After understanding topics, I used to have sums related to section 15 without rules. See, these are all the sums. All ifs and buts are there. If you can understand this, then you can easily score centum, basically. See, valuation rules. Valuation rules, simple. One minute will understand what is valuation. See, it's consideration not wholly in money. Consideration not wholly in money. Assume the price of the product is 1 lakh. They have given 75,000 in cash, and 25,000 they have given some service or some product. Then of that 25,000, which is not consideration, not wholly in money, is there, right? Therefore, something which is other than cash we are receiving. Therefore, you have to see the PSP condition. Price actually paid or payable. Supply to 100. The price is the sole consideration. Whether price is the sole consideration? No. Then some part of the price is not in the sole consideration. Therefore, Rule 27 has to be. Rule 27, what they are trying to see, how you have to value that 25% that they will sell. How they will tell? You have to see the open market value, or you have to see the value of similar kind of property, or you have to see the value of and you have to see the value of cost-based valuation or best judgment valuation. So there is many kind of valuation principles are there that you have to see. So these are all the rules are which is there for both inter and final. Clear? So shall we repeat, guys? Come on, repeat. Section 15.1, 15.2, 15.3. 15.1 basic section. 15.2 inclusions. 15.3 exclusions. 15.1 basic section. Transaction value is equal to assessable value provided 3 conditions are. What are the 3 conditions? Price actually paid or payable. Supply to 100%. Price is the sole consideration. These 3 conditions not satisfied. Any of the condition not satisfied, because these 3 are under condition. Any of the 3 conditions are not satisfied means then you have to jump to the valuation rules. Valuation rules. Okay, 15.2. What does 15.2 say? It's nothing but inclusions. Inclusion, our understanding means what? No GST, no TCS, ISCA. No GST means what? No TCS means what? You have to add all taxes other than GST and TCS. You have to add all taxes other than GST and TCS. Then ISCA, incidental expenses, subsidy other than government subsidy, charges for delayed payments, amount incurred by the recipient on behalf of the supplier. Amount incurred by the recipient on behalf of the supplier. Then exclusions. Before supply, during supply, after supply. Okay, before supply, during supply, after supply. Under before supply, during supply, referred in invoice can be reduced. Not referred in invoice, ignore. After supply, as per agreement and can be linked to the invoice, reduce. Other cases, ignore. This is value of supply, section 15.1, 15.2, 15.3. Clear? So I want you guys to see the sums with respect to 15.1, 15.2, 15.3, and then I can bet, or you can easily say, you can easily do all those sums without any working notes. Also, you don't have to check working notes. Also, you can easily solve those sums. It's my humble request, you please see those sums in now itself, because you understood the topic now. You check now itself and you see whether you can able to solve all those problems or not. Clear? So I'll wind up, guys. We'll see in the class with respect to all thing in GST and also in customs. Thank you.